Thank you, Tom. We're going to focus mostly on the importance of quality of management when investing in the mining business. And having talked to some of all of you off stage, I have a feeling that some of you might disagree with each other, which will be a great thing because a disagreement leads to most knowledge for people on the stage and for people in the audience. So let's see how it goes, but I love to see some disagreement here. There is an old adage that mine is made, not found. And perhaps we can start with you, Kaylee, with your views on how much importance you give to the quality of management.
Yeah, thanks, Josh. Sorry, Joan. I think it's of high importance. It's one of the many things we look at when we're investing, not just asset quality, country, and et cetera, but certainly management. If you don't have a good team that can address all the issues of running a business, really, you don't really have anything. And certainly, we've been rewarded and we've been punished for teams that haven't been able to basically do their job or been able to do their job extremely well. And I've sort of made this comment previously, but I'll say it again for those that haven't heard it, that if you are running a mining business, and I use the word business, and let's say it's called X Resources and your name's John Smith, then what happens if you cross out the X and put John Smith Resources? Would you run it any differently? And I think probably the answer is, in a lot of cases, yes. So really, we sort of implore companies we meet, companies we invest in, to run their companies like they are their own businesses.
Right, and that's true with mining, junior mining, mid-sized mining. Do you differentiate between what kind of managements run these kind of businesses?
I think you've got to, to run a business, you have to play to your strengths. If you're a junior business and exploration is your thing, then that's obviously what you should do. I think in the current world, you need to be a bit of a jack of all trades, really. You could be the best explorer in the world, but you've got to be able to understand social issues. You've got to understand the regulation. You've got to be a good custodian of capital for those people that have invested, and you've got to be able to promote your company, because otherwise you'll be lost amongst the 5,000 other companies that are fighting for capital as well. So there's a lot. There's a lot you have to be good at. But I think the biggest attraction for us as BlackRock is always, what are you trying to achieve with your business, and do you have the necessary expertise and perhaps track record to be able to do that?
Right. Chris, your views on the subject?
Well, a lot of adages don't necessarily stand the test of time, and made, not found doesn't seem very logical, in fact, because you have to find it before you can make it. If you haven't found it, you can never make it. But I'd like to take an expression from outside the industry, which is horses for courses, which means that in different environments, you have to have different types of horses if you want to win the race. And a horse that might run really well on a racetrack, you put it out in an open field in a point-to-point event, it might fall over. It may get nowhere. It may not have any discipline if it doesn't have rails along the sides of where it is. And the period between 2011 and 2016 was a very testing one for the mining industry. And it threw out a lot of truisms of the previous 10 years, which had been pretty good years. But then also, brought to the fore some of the the eternal factors in the industry. And for me, saying that the executives are the solution is not really the case if you've got a very difficult market like we saw between 2011 and 2016. I think factors that were very important during that period were the metals you were in. Hardly any metals were in fashion, but some of them were more out of fashion than others. And the jurisdictions where you were. Because if you have a great metal in a bad jurisdiction, there is no solution for you, really. And so, the executives cannot solve that problem necessarily.
Right. What about a bad management destroying a company? Is that
we
something?
see loads of examples of that.
Right.
There's a lot of, as was just mentioned, there's a lot of uncreative destruction in the mining industry. Look at the rare earth space. There were something like over 200 companies in that space, out of which only one ended up actually producing and surviving. And if you add up the amount of money that the market caps and the money that was raised by the 199 that didn't actually get anywhere, you're talking about billions and billions and billions of dollars that would have actually funded 4 or 5 real projects in the rare earth space. So we ended up with less projects than the amount of money that was thrown at them.
Right.
That makes sense.
Sure. So,
and we may be seeing that again in the lithium space at the moment.
Right. So the management managed to mine the wallets of investors, basically, or that was just a bad thing. Too much of euphoria in the REE business?
Both.
Both, okay.
Both.
Right.
The latter allowed the former.
Rick, can you elaborate on your thoughts on the subject?
Sure, it's a very broad topic, but I think what I'll do, because I'm lazy, is leverage off some of what Chris said. I think the example of the uranium boom, the lithium boom, and the rare earth boom might be an example, in fact, of the importance of management. The boom I was most familiar with, of course, was the uranium boom. The last one. I remember at the beginning of the cycle, after uranium had been down for 20 years, there were 5 uranium juniors worldwide, people that had survived a 20-year bear market. Pretty tough, pretty smart people. At the top of the market, there were 500. Now, I would suggest to you that 450 of the 500, 5 years previously, could not have spelled uranium. In other words, having survived a bear market, there were probably, Tom, 15 teams that were still together in the uranium space after a 20-year bear market. At the top of the market, there were 500 companies. That means arithmetically, the probability that your junior had a competent team was a function of dividing the number of teams, 15, by the entrants, 500. Of course the sector collapsed. So I agree precisely with Chris's observation that there are many factors that are important, but I suspect that the example he gave could be used as an argument for the efficacy of a management team. I would also suggest at the beginning of our discussion that your style as an investor or speculator determines the importance of management. If your style as a speculator involves understanding the narrative around a story and how that might impact public opinion in the market, if you're a skilled trader, which I am decidedly not, then the management becomes much, much, much less important. If you view the stock as sort of a trading sardine as opposed to an eating sardine, then management is of little importance. If you are talking about a very large company, Warren Buffett is, of course, famous for saying that you need to buy a good enough business that it could be managed by a moron, because sooner or later it will be. But the truth is, when you come down the scale in mining to the juniors, those are more properly regarded, I think, as intellectual capital businesses than property businesses. If you look at exploration with a 1 in 3,000 probability of success, most of the assets, by their nature, should be classified as liabilities, really. And the capital in the company, I would argue with you, is intellectual rather than physical capital. So I think management is critically important.
How do you go about assessing how good a management is? You really have to, yeah.
You're talking to me?
Yeah.
Well, first of all, I have the advantage of being an old man. So my favorite test is, have they made me money before? The great American economic philosopher, Janet Jackson, summed it up well when she sang, "What have you done for me lately?" That's important. But I think in addition to the fact that somebody has been a success in mining, it's important that their prior success is very closely related to the task at hand. We've had this discussion, Jayant. If somebody claims that he or she has been a success because they operated a producing gold mine in 2 billion-year-old Archean terrain in French-speaking Quebec, and the proposal is to explore rather than produce for copper gold in 15-million-year-old accreted terrain, tertiary volcanics, in Spanish-speaking Peru, while they may have been a success, the success is completely unrelated to the task at hand. So I think that you have to define success, define management skills fairly narrowly to suit the task at hand. There are people, the very, very, very top of the performance dispersal curves, the Ross Beatties of the world, the Robert Friedlands of the world, who sort of transcend that. But I think, in fact, the pointing out of the exceptions and how few they are proves, in fact, the rule.
Right. So you are trying to fit their competencies with the environment that they are working in.
And the task they've assigned themselves.
Right. Okay. So, but you still have to look at their competencies in financial issues, political issues, cultural issues, geological issues.
My only point is, Jayant, people who have been successful in the past have an extraordinarily positive feedback loop. They have huge advantages. It's easier for Robert Friedland to attract high-quality people because the assumption is success. It's easier for Robert Friedland to attract high-quality projects because there's an assumption of success. If Robert Friedland calls me up at 2 o'clock in the morning, although I hate him for it, I take his call because I think he might make me some money. So there's ease of access to capital. If you assumed that there was somebody who had equal competence to Robert Friedland, unlikely, by the way, that wasn't already a success, that person wouldn't have access to capital, to intellectual capital, and to properties. And so I personally believe that reputation and success is an advantage in every single aspect of the business.
How would you deal with a young person who has actually no history of success but might actually be a very competent person?
If I were as rational as I pretend to be on stage, I would ignore that person. The truth is that I'm not a rational actor. And occasionally, as an example, funding Brian Dalton 20 years ago for a nickel a share, that's worked out for me. But the truth is, Jayant, I'm embarrassed to say this, if I had worked a lot less hard over the last 40 years, and I had confined my efforts to the best of the best people I knew, worked half as hard, did 1/10 as many deals, I would have made probably more money for myself and my clients than I've made. It's a stark confession. But looking back, had I had the discipline to do less, I would have ended up with more.
Chris, you have something to add to that?
He just reinforces the horses for courses. You can take a certain person who's succeeded in a certain environment and you put them in a different environment. And we have had they can't run anymore. And that is actually a bit of a danger because thinking of some people who did very well and then realised assets at the tail end of the phase before 2008. Some of these people were believed when they came back with their new vehicle that they were going to repeat. But the souffle didn't rise twice. And you can lose a lot of money if you paid a lot for the souffle. You're taking a bet on someone who's a newbie and they don't work out, well, you probably not make as big a bet as, I can think of one person who was phenomenally successful, and they were very clever, and they did really well pre-2008. They came back with a new vehicle post-2008. At like 2010, it had $1 billion Canadian market cap, and then it shriveled down to like 100 million because that person ended up in a lot of legal fights with his partners, and really has only recaptured his mojo now, 10 years after his previous time. And if you followed him through that period, you wasted a lot of time and money. It's probably better to go back to him now that he's finally got his, he's starting to do again what he did before, rather than, so the person has to be repeating successfully what they did before, not just getting a new vehicle. They have to be in the same ball pen as they were before.
What about the possibility that once a person has had a very good success, he might not be any more passionate about winning anymore? Is that a risk you think?
Oh, I definitely, in this case that I'm talking about, the person was very laid back in his second reincarnation. Mm-hmm. And, I can talk about somebody else here, which is, Mick Davis at Xstrata, who built a phenomenal company through a very methodical building blocks from small start to a great entity, really creating one of the world's great mining companies. And then came back in a second reincarnation as a private equity fund, and in the greatest bargain basement in mining history, managed to not buy a single bargain. And then ultimately, folded up the tent. Fortunately, the public weren't involved in losing money in that, but it was a great pity because there was a talent there, but he couldn't repeat what he'd done before.
Right. Kaylee, you have something to add to that?
Yeah, it's a very interesting topic of discussion and quite broad. I think the challenge to your original question, which is what happens if they have no track record. I mean, I tend to be quite open-minded, and I think if they've got a world-class asset and they're in a safe jurisdiction, their business is going to be a lot more forgiving to perhaps their lack of experience and expertise that someone with a good track record has. So it is quite broad, and it is horses for courses and a case-by-case situation. But I think what's very apparent in the industry, and Rick's alluded it to a number of times, is there's lots of people with grey hairs and lots of experience, but they're of an age, and it's very difficult to replace that experience. We're a cyclical business, and we see it not just on the mining side, we see it on the investing side, we see it in the broking community as well. It's very hard to replace that. I think we've probably got another generation or so to run through as we do it. But I would be very interested, people with no track record, bringing new ideas to the mining industry. Rick mentioned previously innovation. That would be very exciting. Somebody who could bring us a concept they're young, they don't have a track record perhaps, but they've got something very exciting and very new to look at. And we've seen that with the EV trends, the battery minerals. That's a new exciting space. It's generating a lot of interest. And there's super whiz kids out there that are going to be able to do things that we don't know about and don't understand and haven't even heard of. And I think that's probably where the track record is going to be less of importance and more about the intelligence and intellectual capability of the management team.
Right. Chris, a question for you. Just changing tracks in terms of from what we have been talking about to analyzing companies. There are companies, let's say, run by Lucas Lundin or Ross Beatty. Some of the shell companies that they start might trade for $40 million market cap. And at the same time, there might be companies with cash of $40 million, but run by very unknown or bad management, trade for $20 million. How do you differentiate between the two things? How do you when you look at a company, let's say of Lucas Lundin, trading for $40 million when it has probably nothing in it, what do you do with that? Do you accept that premium, or you don't look at that company?
No, I wouldn't look at that company because I need to speak to the investors about what the company is, and they will know who Lucas Lundin is. If they want Lucas Lundin, they can go buy one of his other ventures. This company, if it's an empty shell, and he says it's going to become something in the tellurium space, I'd want to see what he was putting into it.
Right.
Because Lucas Lundin and tellurium, sorry, I haven't seen that happen before. Horses for courses.
My problem is that I have focusing just on value investing, I have missed the train many times because some of these companies stay overvalued all the time. Rick, you have any thoughts on it?
Well, first of all, Jayant, I have personal knowledge of the fact that you've done fine. So don't worry about missing trains. You miss a train competing with an investor base that mostly goes broke. And without going into elaborate detail, you've become rich. So I wouldn't worry too much about the trains you've missed.
And other trains come along.
Yeah, really, don't break a leg chasing a bus. Another one's coming by in 15 minutes. With regards to the discussion that we were having, though, I think you framed the question incorrectly. When you talk about a vehicle that is promoted by a first-class person having a $40 million enterprise value with no assets, that's a function of the market. Not too long ago, in 2015, you and I were talking about arguably the best financier of his epoch, Robert Friedland, with Ivanhoe Mines, with 90 cents a share cash in it, trading for 60 cents a share, with an enormous platinum deposit, a world-class copper discovery, and the best zinc mine in the world thrown in for free. The beauty of the mining business is that once every 5 or 6 or 7 years, there is this incredible washout sale when you can buy the best of the best at a discount to cash. The problem becomes that we want to be aggressive at precisely the wrong time. If you pay some attention to the market cycle, you don't have to differentiate between the good, the bad, and the ugly. You can buy the best at a discount. It's just important for us to have the ability, when there's nothing to do nothing. Then we don't have to have this discussion.
Do we have any questions from the audience here? Cloud.
We've all criticized management because they have not produced very good results. There's very few people in the audience. So my question is, should we be continuously listening to things that we all know and that are uninteresting for the audience? Like, should we have good management and this and that? If there are so few people in the room, is it because the market is down, or is it because we have great speakers who don't say anything that interests the public? Like, which are the best
We should take our lead,
commodities?
gentlemen.
Which are the best commodities? What's your best ideas? Which stocks we should consider? Which are undervalued, and so on?
Anyone has a response to that? Anyone wants to respond to Cloud? Rick?
Sure. I mean, the gentleman gets to the point that we normally get to at investment conferences. The dais suggest that their job is to educate, or in a biblical term, teach people to catch fish, when the people, in fact, want the dais to catch the fish, clean the fish, serve the fish up with proper garnish. In other words, don't teach me how to do the work, but do the work for me. Let's start, just for fun, with the subject of the panel in the context of your discussion. The management teams are not that difficult to identify. certainly Friedland, certainly Lundin, certainly Beatty. There's a group of people that have been serially successful. I think you know who they are, Cloud. You've been in the business a long time, and you, like me, have this sort of problem, don't take this wrong, but being sort of intellectually promiscuous. And despite the fact that you know who the good people are, you get bored of doing nothing. And so you and I congregate with people who, in normal circumstances, we would have better sense than to congregate with. In the context of where we are in the market now, all of my competition, I'm sort of doing two things that work for me, and I think they would work for other people in various guises. The first is that I've gone back to my roots as a lender. And I would encourage people to look throughout the balance sheet. Everybody seems to want the upside in equities, ignoring the fact that the mining business has destroyed capital. In the lending side of the Sprott business, while the TSXV resource index lost 88% between 2011 and 2016, the lending business generated 17% annualized compound internal rates of return. What does that tell me? Well, the first thing it tells me is, for me personally, an old fat white guy, the worst piece of debt is better than the best piece of equity on any individual balance sheet. So I like that. What I do like in the equity space is I try to be places where other people aren't. Right now, people aren't in exploration. We've underinvested and misinvested in exploration for 20 years. There's an enormous need for high-quality projects. There aren't very many high-quality projects. The way I personally am most comfortable in the exploration business is, as you know, with the prospect generators. While the rest of exploration has offered up, at least according to mineral economists, a 1 in 3,000 chance of success, which is an odd value proposition. You take a 1 in 3,000 chance to get a 10-to-1 return. It makes the lottery arithmetically look like a very good deal. But prospect generators, by contrast, I think I've invested in 65 over 35 years. And now, assuming that hot mod works, I've enjoyed 22 commercial successes and 21 takeovers. That's 3 standard deviations, as I understand it, better performance. So for me personally, Cloud, the companies that I'm going to be putting more money into this year will be prospect generators, to the extent that I can do it with private placements and grab warrants. That's as specific as advice as I can give.
Is there... well, I thought we still have 7 minutes left.
Jayant, sorry to dominate things here, but I think where you learn most is from case studies. And case studies are rather difficult to put on a panel if any lawyers are in the room. But I would say that 8 years ago, I was talking with Rick Rule about an investment in Venezuela. He said, who's going to be managing it? I said, X. He said, X, shit. That guy's never done anything, right? It cost me over $1 million and took 8 years to rectify it by getting control of the company and getting it taken over. In another case, I said to Rick, as regards a manager of an investment project in Mali, this guy is a bullshitter. And Rick said, oh, no, it's, there's X and Y involved. Of course, it blew up. But guess what? 6 years later, Rick got together with a couple of friends and took the company over by very cleverly using a company that I'm involved in. So the way that you can rectify these things, it costs a lot of money, a lot of grief, a lot of lawyers' letters, a lot of brushes with regulators that you would wish you were private. The only way you can sort this shit out is doing it yourself, because no one else is going to help you. Case studies is how you learn.
Right. I think we have come to the close of this, so I would like you to join me in thanking the panelists today. Thank you.
Thank you, John.